commodities, but it's been a while we did them. Let it not be like we are withholding or hoarding information. Now, the truth is that you on different exchange, foreign exchange, the commodities market, the indices markets, and the likes of it. So agro commodity is just one of them. Now it's divided. Basically, trading is divided into different exchanges, but the major ones are the foreign exchange, which we call forex rather. Forex is part of the foreign exchange. Then we have the indices market also. Now, commodities trading is usually divided into three different categories. So under commodities, we have the precious metals. That is where you can trade your gold. So gold is under commodities, but precious metals. We have gold, silver, platinum, and even palladium. Those are the instruments that can be traded under precious metals, still under commodities. Now, also under commodity, another category that can be traded are the oil, or we call them energy products like oil. So we have the WTI, West Texas Intermediate oil, as well as the Brent oil. Then natural gas. Now, all of these are traded as energy under commodities. Okay. Then the last category of commodity is the agro commodity, which we are about to deal with right now. So the agro commodity contains a variety of, instruments that can be traded, ranging from the soft commodities to the hard commodities and the likes of them, where we have the coffee, cocoa, cotton, the wheats and the likes of them, right? So now these are what we're going to talk about. Now, basically, so agro commodities are crops that are grown and are harvested to provide food and other raw materials, and even sometimes fuel. Okay, these are commodities that are grown and harvested to provide food and raw materials, and sometimes fuel. Now, sometimes some of these commodities can be consumed in their raw state. Some of these things we are talking about, they can be consumed in their raw state, and sometimes also they need to be processed into finished goods. Okay, the likes of cocoa, you cannot consume cocoa in its raw state. You need to process it into beverages, all right, for you to then consume it. Or they serve as raw materials for other things. Okay, so like we have rightly stated here, So now these things are needed. These things are needed. Take, for example, wheat. Wheat is one of those agro commodities that are grown, also harvested. Now they call is under the soft commodity because it's easy to grow it. Although, depending on the weather condition of your region or your country, so to say, not all countries support the growth of wheat and on a large scale, right? That's why the likes of Russia, Ukraine, in fact, those two countries contribute 1/3 of the whole wheat we have in the world. Right? They supply to nations like China, uh, India, Pakistan, and the whole of them, right? So now these wheat, for example, can be consumed by humans and also by animals. They feed animals also in the stables, or in the ranches rather. So they need them on a multi-level. I'm talking about wheat because wheat is like one of the top most traded agro commodities in the world. Now, what is agro commodities trading? Now, this is classified as world largest traded commodity class and traded on national and international commodity exchange. So, take for example, China grows wheat a lot, and most of them, they do what we call like a closed economy on these their commodities. They don't really supply to the world. Let them be stable food in their country. In fact, they don't even have enough. They have from other countries, to improve their wheat consumption. Now, but international exchange, I think we have majorly two of them. Get names here for us before we are done. Now, we trade these things. One other information that you need to know is the fact that these stocks are traded in three different ways. Agro commodities can be traded in three ways. And everyone here now clear, looks like there's interference. Looks like there's interference here. Your response, can you hear me loud and clear? Because I'm sensing there's interference. Wow, it looks like nobody can hear. It's breaking. Well, I guess serving as a fair now. Really. So just give me a minute. Let me. All right, everyone. So I guess the network should be better right now. I guess the network should be better. So please, can you hear me loud and clear now? Can you hear me loud and clear now? Okay. Is it only okay, I have multiple responses. Okay. Say poor audio quality, still poor. Hopefully the interference is not anymore. I just want us so that when we go to our charts, let the whole thing make sense to everybody. I'm just trying to give us a brief background to agro commodities trading from where we'll now move to our charts. Execution. The whole thing is, talk is cheap. We might talk and talk, but we need to, look at how we can trade some of these agro commodities. Now, these guys have different categories. The agro commodities that we are trading, they have different categories. So now, how do you trade some of these guys? There are certain basic information you need to have to trade them. There are some basic information you need to have to trade them. For instance, which ones are the most traded commodities? Now, some of the most traded is corn, wheat, and coffee, right? Corn, wheat, and also coffee. Although some persons can add soya bean and the likes of them, but let us major on corn, let's major on wheat, and let's major on coffee also. Now, when we are talking about these three, for instance, wheat, what are the things that affect this guy? This network. I hope you guys can still hear me clearly. Now, why do people trade agro commodities? Now, the probability, what do I mean by probability? Now, agro commodities are the most profitable instruments in the forex markets. That is, with less loss pips, you can make massive profits. What do I mean? Have you tried trading? Okay, thank you very much, Ismail Musa. Okay, thank you. Have you tried trading, let's say, Euro USD? You place a trade on Euro USD of 0.01. Then you place a trade also on US 100 on same 0.01. You notice that where Euro USD is giving you like in Naira now, for instance, you're making like 2,000 Naira in profits with the same 0.01. US 100 can be giving you like almost 4,000 Naira in profits, right? Or even more. The same 0.01, the same number of pips. At the same time, corn or wheat will be giving you more than 8 to 9,000 Naira on the same 0.01. Now, what is the difference? Volatility comes to play, but this agro commodity, right, they are much more heavy. They are heavier. They are heavier. Now, at the same time, it's more like somebody doing business. You are doing like a cement business. Let's say you started the cement business. They bring in cement, like 2 or 3 truckloads of cement. You have like a mini depot, and you start selling like a retail trader. Now your capital requirement might be like 15 to 20 million to start off. Then compared to somebody who wants to go into oil and gas, who wants to own an oil well, his capital base might even possibly run up to hundreds of millions. So now these are what we are talking about. Now, in the sense that if you finish selling one trailer load, the profit you make is nothing compared to somebody who will sell like one tanker, So at once, now it means that on US 100, you have, less volatility on the agro commodities. So what makes D30 dangerous? Have you traded D30? Have you traded US 100 before? Have you traded US 2000, in fact, US 30? Now, these guys are dangerously volatile. What do I mean by volatile? Price can just move massively in one direction. Like before you say Jack Robinson, price has gone. I'm not talking about fundamentals now. I'm talking about normal trading. Before you just say anything, price has moved massively. It's very volatile. Anything can happen at any time. Right now, but with agro commodities, they are less volatile, but yet they still give you more profits. Right? More like somebody selling, you have a car stand, you sell Toyota cars, you sell Honda, you sell Hyundai, and someone else has a car stand and is selling the likes of Benz, Range Rovers, and even Bugatti, Porsche. Now, if that person sells one Bugatti alone, he might not sell Bugatti one in 2-3 months, but once he sells one, he will make more profit than you that have sold like 10 Toyotas. All right. So that's what we are talking about. Agro commodities, they are less but where price not a, is massive profit. Right? So that is one reason to trade there. Now they have global value, they always appreciate over time. Now, if you notice now there's food scarcity, and what it translates to the fact that prices of foods are constantly increasing. Now, easy predictability, they are seasonal-based product which makes for ease predictability. Now, let me also run through all of these things. Now, these are the things that affect these agro commodities. We have seasons, you have on-season and off-season, uptime and downtime. You cannot find them all year round. You can't find them all year round. There are specific period of the year where they are in their season, they are available, they are everywhere. Price most likely is not high. There are seasons where they are not available, but some persons have stored them already. Then they bring them out. You don't expect price to be cheap. Price most likely is going to be going high at that time. Then also inflation. So for instance now, when in 2002, February 24th, I guess, when Russia started fighting Ukraine. Now, given that these two countries are from Eastern Europe, and when they started fighting, Russia and especially Ukraine happened to be like a slice of uh, Russia also is a major supplier of on top of the whole wheat supplied. Okay. Now, these two nations started fighting. By implication, the down south, where you have more of the cities that grow or places that grow these wheats from, Ukraine, were being bombarded by Russia, so they couldn't, their infrastructure for processing these agricultural commodities were, being bombarded by Russia. So there was less supply out from Ukraine. Now, the price of wheat jumped by 28% in the preceding weeks. It jumped by 28%. So so other countries that supplied now started to increase their supply, to meet up with demand. In fact, Russia also increased her own supply because there was a shortfall of supply from Ukraine to the other countries they are supplying. So Russia took advantage. Now, although it came down, but there was like 2 to 3% increase in the price before the Russia-Ukraine war, right? So now it means that whenever they are now supplying, that excess of 3% increase in price has caused inflation, which will be exported to other countries. Especially, they export more of them to Africa, China, India, especially countries in Africa here. So, we are importing inflation now, just like we have a natural inflation of dollar, right? So it's a natural inflation. We import this inflation also. My audio is still distorted. It should be fine. I think we fixed this. Is it the same for others? Who mentioned that? Basil. Basil.
Yes, please.
I guess. Okay. I guess you can hear me better than before now.
It's
Please,
slightly
in
distorted.
case you just find out that your audio is, maybe not clear or low or distorted, don't hesitate to just drop it on the chat box, all right? Drop it on the chat box, please. The weather is just, so heavy over here. Currently in Abuja here, Rally Trade Office Abuja, taking this class. So the weather here in Abuja is something else. It might rain almost all through, and if it's not raining, the weather is very, so the network can be bad. So please just let me know. We are constantly trying to do something about it. Okay, so I think we've gotten some information about that. Then we'll talk about seasons. I've also tried to explain inflation, the weather. Yeah, weather, like I'm talking about the weather in this place currently. Now, there are places or times where and it doesn't favor the planting season. Okay, so hence you have less outputs, and there is always a constant demand for agro commodity. And this is one of the reasons why there is always constant demand for them. This is food. Food most times hardly gets shortage in demand. In fact, the demand always increases, right? So no matter how much you increase the price of rice, the price of beans, the price of gari, for instance, the level of demand will hardly drop. It might just drop for a moment, but it will come back again because these are basic commodities that we consume almost on a daily basis, right? These are basic food that we consume, and food is essential to life. Now, wheat is one of those commodities also that, or even corn, that there is always constant demand. Hence, the weather condition can determine the output. So higher output, price is stable or low, but lower output due to bad weather condition, price can fall. Sorry. Yes, it's constant. It's currently being recorded on YouTube right now. It's being recorded on YouTube, so you can watch via YouTube, or I would even suggest that after this session, we'll drop the link so you can go to YouTube and replay the video again. And replay the video. So please don't worry if you miss anything, right? It's been recorded live on YouTube, so we can have it again. Mr. Shaw, I don't know if you can hear me. I'm sure it's still being recorded. Then the last one, improve seedlings. Yes, let's not even talk about Nigeria. So some companies who are into agro-tech are trying to improve seedlings that grows faster, grows better, produces more. So these things can make food supply to be, in excess. And when it's excess, price can drop. Price can drop. Now, the last one is politics. Yes, politics and what else? Now, what else do you think the prices of agro commodities? Is there anyone that feels something we've not talked about that affects the price of any agro commodity? Just drop it on the chat box quickly while we quickly move to our charts. Okay. So these are places where you can source out for any news on agro commodities. Sorry. You can source for commodities here. You cannot take this because usually right now, worldgrain.com, agweb.com, seedtoday.com, graincentral.com. Now, these are some of the sites where you can source out for news. Now, if you want to trade agro commodity, it's essential you keep up with some of these sites that will tell you the latest happening and possibly how it's going to affect, price. Regional conflict. Thank you very much, Collins. Like Russia, Ukraine, right? Do not forget to give the YouTube link. Sure. Ilelaboyi Lufemi. Yes, it will be dropped. To be dropped, all right? To be dropped. So now let's move to our charts so that you will get more. Okay. So I'm on my chart right now. If you can see my chart, if you can see my chart, please signify. If you can see my chart, please signify. Just drop a yes if you can see my chart. Or is my network out again? If my network is out, please just drop it on the chat box so that I will know. If you can't hear me, well, I guess I have to send us a message. Is my audio still good? Still good, no response. I guess the audio is bad again. All right, I'm back. So I guess we should be good now. We shouldn't have any issues right now. Again, that has been sorted. Okay. So are we good now? Can everyone hear me? Can you hear me? Just let me know. Yes, yes, yes. You can hear me. So that I will quickly dive to our charts and do justice to these agro commodities. Okay. For Ismail to hear me, then every other person should be able to hear. Okay. All right. Thank you. So let's proceed. Now, it's essential that you note. Let's take it one step at a time. Let's take it one step at a time. Now, this is wheat. Okay. For you to trade on anything, now let's go technical now. If you've been trading before, you want to do your proper analysis. Okay. Basically, I want to know where the price of this guy is headed, because one thing I've noticed with these agro commodities is that they have alternating trends. Now, politics can affect them. Conflicts, disaster can affect their prices. Now, just because the agro commodity does not mean that the price doesn't fall. Yes, it does fall. It rises and it also falls. Reason is because we are trading them as CFDs. That is commodity for difference. You can trade them as spots, you can trade them as features, and you can also trade them as CFDs. Now, what we are doing here is the trading in CFDs. Okay, that's commodity for difference, which means you are trading on the predicted price, either going up or going down, which means price can go up, price can also fall. So when price is going up, price goes up for a while. Then when price is coming down, price also comes down for a while. Unlike our currencies where the alternation can be very, very fast, agro commodities don't really do that as much. They can be consistent for a while. But when they change, they have also changed. In the midst of the consistency, it's not as if it's always smooth. So let me give you the secret of trading agro commodities firsthand. If there's anyone mute, let me unmute rather. So everybody will be mute, will have a smooth sailing. The capital requirement to trade this guy is way more than your normal, currencies, indices, and the likes of them. So now I want to trade with. I go to my chart. First of all, this is a 1 hour time frame. Forget about what you are seeing on the 1 hour. Just forget about what you are seeing right here. Okay. The first thing for you to do is to find out where is the trend currently. Has price been crashing, or has price been going up for some time now? You want to know, trust me. You want to be on the side of the trend. There's a saying that the trend is your friend, right? And don't trade against the trend. If you're trading against the trend, then you should be very smart about it. Please, once you come into this call, if you notice you're on mute, just mute yourself. Okay. Now, which means, how do I determine my trend? I'm not talking about the overall trend. I'm just talking about the intermediate trend. That means where has price been going for the last few days, few weeks, or even possibly few months. Now, how do I determine that? I can use my 4-hour time frame or my daily time frame. 4-hour time frame. Now, on my 4 hours time frame, what do you notice? What do you notice? What has been the trend for the past since May? Where has price been going, up or down? Since May, since May, especially towards the ending of May, like 20 something of May, 19, 24, 30. Where has price been going, up or down? Like I said, we are doing this analysis together. I'm trying to involve you. P said down. Who else? Who else? Who else? Up or down? Up or down? Downtrend. Down. Bearish. Okay. Thank you. For some of us that don't understand the trading terminologies, OB genius. I said bearish. Bearish means price going down, price being knocked down. Now, down. Thank you very much for your responses. Now, you can clearly see that since May, price has been doing more of downward movement. More of downward movement. That's towards the ending of May. More of downward movement. Bearish. Now, yes, at some point that bearish will stop, right? It won't keep falling like that. Now, before May, what was happening? Was it falling or was it rising? You clearly see that it was rising before it started to fall, right? Now let's see. It was rising. Now, where did it start rising from? Let me zoom out. Where did price start rising from? And before it started rising, it was falling gradually to before. Fall, rise, fall, right? Good. So if you notice, price started rising from this point here. This was the support level. And this was the resistance to it. Like it was around this zone. Let me zoom out so you see it very well, clearly. Okay. Price was around this zone. Let me not forget what I was doing. I don't want to get out of that. Price was around this zone, like this zone, this zone. There was a mini resistance at the top here. Now, price then started to fall. Okay, perfect now. All right. Okay. Now, we are trying to do a core analysis. Once you go to a higher time frame, the chart then looks clearer. Now, even when you go to a higher time frame, I'm trying to interpret what you are seeing, because what you see on a higher time frame is mostly true and can hold water than what you see on your lower time frame. And we are using higher time frame, especially because we are also dealing with agro commodities that can trend for a while. So we want to find out which is it trending right now, or is it ranging right now? Because there are times where it's not really trending, it's ranging. For instance, all these points here, price was just ranging, doing up and down, up and down, up and down from March up until April. For like 2 months, early March till middle of April, thereabout, it was just ranging before it started trending up. Okay. Now, so that means price started from here, ranging before it started trending. It means that now that price is falling, there is a tendency that price can fall back to where it was before it started rising before. I don't know if you get what I'm trying to say. It means that price, as it is falling right now, can keep falling till it gets to this support level that we've seen, the most recent support, this place. This was where it was before it started rising to this point. From here, it started falling. That means it can fall up until this level here. Guys, do you understand my point? If you understand, just say yes. If you don't, no, so that I can recap. Nuka, you raised your hand. Nuka and Prince Loveday. Let me do for Prince first. All right, let me do for Prince first. You can unmute, then let's have you. Prince Loveday.
Yes.
You can. All right, so yes, I'm listening. I thought you wanted to say something, ask a question or
No, no,
contribute
no, no,
something.
no.
Oh, okay.
No,
All right,
I'm seeing it.
just okay.
Yeah.
So then who else? Who else raised his hand then? I think Nuka, right? Nuka, you can unmute. Let's have you. You can unmute yourself, Nuka, so that we can have you. Okay, I guess Nuka is not having any question again, or he mistakenly raised hand like Lovely. So now price is falling here. It means that it can fall all the way to this point before there's another possible rise again, possible. All right. Okay, yes, I zoomed out a lot, Peter Sunday. We are dealing with wheat. wheat. This is it, wheat. And I'm on a 4-hour time frame. I've gone to a higher time. I want you to see from if you are just looking at price like this, right? It's easy to be wrong. It's easy to be wrong. I need to go, or especially when you are on a lower time frame, like 1 hour, 30 minutes, even 15 minutes, it's very easy for you to get your analysis wrong. But if you go to a higher time frame, like your 4 hours or even your daily time frame, then it's possible you get it right, right? So we are currently on a 4-hour time frame right now, and I'm trying to explain to us. Someone said I should recap. Now, what I'm saying is when you open any chart, especially agro commodities, the first thing is to find out what is the trend. The trend is the direction the market is going or has been going for a while and can possibly keep going. Okay, so that is your trend. Now, we want to find out because agro commodities can trend a lot. They can trend in a particular direction for days, for weeks, possibly months. Then after a while, they change direction again. Remember that they are seasonal and the likes of them, right? So we want to find out. That means we'll be taking our trade in the direction of that particular trend. You have a higher chance of getting your trade right. Now, this goes for even some of your currencies that you trade and indices as well sometimes, right? And even your gold, it goes for it, but you see, it works more for agro commodities, right? So that's why we are on a 4-hour time frame now, trying to establish our trend. Now, when we went to 4-hour time frame, we agreed that currently, or what we have been seeing for the last few weeks, is that price has been falling, especially since the late May, right? From 28th of May, thereabouts, price has been falling, fell all through June. Now, July, you notice that price is ranging, but it's not really pulling up as much. It's just trying to range, okay? So it means that, and so when we are now looking at the direction of price has been falling, is it possible to keep falling? And if it's falling, where is it possibly going to fall down to? Now, that's why we zoomed our chart to see more area. So when we zoomed out a little more, we found out that before price started rising, the last time it rose, this was where it started rising from. We formed a support level here, ranged before rising. Now that it is falling, there is a higher possibility that price will fall back up until this level again. Then once it does, there's a higher probability that it will start rising again, all right? So I guess you should get it now. Then if you still do not get it, remember it's being live streamed on Zoom, I'm sorry, on YouTube. And you can also have access to this video to play back, get the whole thing again from the beginning. Now, it's falling. Can it possibly keep falling? Yes, right? It can possibly keep falling. But amidst the falling, I've been seeing that price has been ranging. Now, when price has been falling, what do you notice? I go back to my 4-hour time frame. Sorry, my 1-hour time frame. When price is falling, should I be buying more or should I be selling more? Which one should I be doing more? This is a question to everybody. When price is falling, should I be buying more or falling or selling more? Buying more or selling more? I need your responses, please. When price is falling, are we buying or are we selling? Buy more, sell more, sell more, sell by following the trend. Sell, sell, sell. Okay, someone said buy. Ismail said buy. Ismail, you don't want to be buying when price is falling. You buy after price has fallen well and is now rising, then you buy. You sell more, right? Continue selling. Now, we don't just say, oh, because price is falling, so we should just go and sell. We need to know where exactly to sell, where exactly to sell. Now, for me to sell, I will not sell on a higher time frame. I'll need to come back to my lower time frame, like my 1-hour time frame, or even your 30 minutes time frame to sell. That's what you do. Now, when I want to sell, I look for what I call liquidity. Liquidity is that point where you have a lot of candles gathered like a cluster. For instance, let me use on a 1-hour time frame first. Or let's use a 30 minutes time frame, it's still fine. Let's say shape. You see the whole of this place here. The whole of this place. You'll agree with me that candles are just going up and down, up and down, up and down, up and down. And they are not really long candles. They are smaller or short candles. And anyone that wants to be long is being rejected. Like this one was rejected. This one that wants to be long was rejected. Please, can you mute Abiodun or Motosho? Mute you again, please. Just have yourself muted so you can have a smooth class. This area here, this is area of liquidity. That means there's a lot of movement around, sorry, there's a lot of predicted movement around that point. Let me explain liquidity like this. Okay, let me put it this way. Imagine I'm traveling from Lagos to Abuja or from Abuja to Lagos, as the case may be. For the fact that I'm going down doesn't mean that I will just start going and from Lagos all the way to Abuja straight up. No. At some point, I will stop to rest or to ease myself, to use the restroom, to eat, or to stretch my legs, right? That means at that point, I'm no longer going in that same direction from Lagos again. I'm resting. I'm resting, right? Then when I finish resting, so that resting point is where we usually, I'm calling liquidity point now. Price is trying to gather more momentum to continue to fall. I don't know if you get my point. Price is trying to gather more momentum to continue to fall. So when it gathers enough momentum, then it falls down back. So let me look at it, especially from when price was trending, especially from when price was trending. So let me go back a bit. Now, see this. Price falls. What happens here? It ranges, right? It gathers momentum. Let me mark it. I'm showing you how trade is being done. It gathers momentum for a while because almost all through, price was not really having a direction, just up, down, small candles. After rested for a while, what happens? Look like want to pull up, then continue going down. Went down for a while. The following day, can you see this cluster over here? Let me increase. Can you see this cluster over here again? Now, how do you notice, how do you identify it? Is smaller candles. The candles are now smaller. And anyone that wants to be long, you notice that it has a longer shadow or a wick. It means it was rejected. Like this one here, trying to pull up, be long, it was rejected, right? So anyone that wants to be long, it will be rejected. So look, watch out for where you have short or small candles, just doing up, down, ranging. When you see it, price is trying to form a liquidity around that area. Now, it means that after that liquidity point, there is more possibility that price will go back down, like continue in the direction of the trend, right? Continue in the direction of that trend. Now, sometimes it might just look like it wants to pull up, then it pulls down again. Now, there's also one thing you will notice here. For some of you who have not noticed, you notice that there are series of gaps. Price just gap from here all the way to this point. Let me take this one out. Take this. Price just gapped from here all of a sudden to this point. What happened? Price then gapped again from here, started here. It gapped from here, started here, gap from here. No, so there's a lot of gap around 2 points. There are gaps around 2 points when trading agro commodities. I don't want to lose my line of thoughts, so we'll come back to the gaps, okay? It means that price will mostly fall and rise. What is this? Does this qualify as liquidity? Yes or no? There's no right answer. I'm sorry, there's no wrong answer. Every answer is right. It's your opinion. All right. So please don't be scared to just. Can this be done on any time frame? Now by this you mean higher time frame is to get the directional bias, which is either up or down. Higher time frame. Now, lower time frame from 1 hour and below, 1 hour, 30 minutes, 15 minutes, 5 minutes, 1 minute, we are looking for liquidity to enter. We are looking for like a sniper entry, that point of entry. So liquidity helps us to know when to enter the market. We look for liquidity and we enter from there. So this can only be done from lower time frames, okay? If I understand your question correctly, all right? This can only be done from lower time frame. Okay, if trading on 5-minute charts and what individual candles and 4 hours chart, please, which one is more preferable? Because I had you explaining on 4 hours and I haven't tried that before. Okay, the 5-minute chart is quite different from the 4 hours chart. Very, very different. For instance, how the candle looks like on a 1 hour is slightly different. On a 1 hour candle, on a 1 hour chart, one candle stands for 1 hour. One candle stands for 1 hour. It means after that candle finishes, like let's say from this one starts from, I think is 05, 05, 05. Let me see. This candle is 305. This is 405, 505. So this is currently 153, 58, right? So by 205, another candle will start. Okay, so one candle starts for 1 hour. After that, another candle starts for the next 1 hour, another candle starts. But on a 5 minute time frame, it means that one candle stands for 5 minutes. After 5 minutes, another candle starts to form. After 5 minutes, another candle starts to form. So which one should I use? Now it depends on the kind of trader that I am. People use higher time frame mostly for analysis. Mostly for analysis. Higher time frames are mostly used for analysis. Then to now take a trade, after analyzing, it helps you to know, okay, which direction you expect price to go. Then you go back to your lower time frame. You will see it more clearer because the way price moves on lower time frame, 5 minutes, 15 minutes, is much more faster. It looks faster, right? So you go back to your lower time frame to execute, to enter the trade. Most often than not, that's how people do it, right? So the difference is that 4 hours is mostly used for analysis. People hardly take trade on 4 hours. Very few people do. And those who do take trade on 4 hours, they are what we call swing traders. That means they place their trade and they don't intend closing their trade anytime soon. They leave their trade to run for a long time. But when you're trading binary options, binary options are very fast. You enter a trade now, more like a futures. That means you are predicting that in the next 30 seconds, price will rise, or in the next 1 minute, price will fall, right? If I'm being correct. That means if you enter a trade, let's say at this point now, here, and you predict that price will rise, if price then falls, you have lost. Okay, so binary options are faster, hence lower time frames are used. But when we are talking about trend trading, you're not closing your trade anytime, so you leave it for days, possibly weeks, right? So 4 hour time frame, 4 hour time frame, 1 hour goes on for one candle goes on for 4 hours. After 4 hours, another candle starts to form. Okay, so that's what they mean. Basil said this shed a lot of light on TF mystery. I don't know what TF is. HF to get directional. Okay, time frame mystery. All right. A higher time frame to get directional bias and lower time frame for entry point identifying bias. Exactly. Now you are getting the gist, right? So I need you to still go over this video again and again and again when you see it on YouTube, when you take the link. By the time you've gone through this video like 3, 4, 5 times, it will be like a light bulb. Whoa. All right. So this is exactly how it is. Okay, you have that light bulb moment, like that the veil just got off from your eyes. So that's what we are talking about. Now, I'm taking my time to explain because I also need you to join subsequently. It is better we get the understanding now so that the next class, we just start taking trades. Like, even possibly before the next class, most of you who understand what I'm trying to say here now would have already started taking trades, like, by yourself, because the understanding has come to you. Okay. Now, liquidity here again, and guess what? Price try pulling down, range, but still pull down, right? Now, no matter how far up price goes, it will pull down. Guess what? If price goes above this liquidity here right now, this one is like a staircase. We call it market structure. It's like a staircase. All right. Protocols, can be held except for exceptional cases like fundamentals. Now, if I extend this other liquidity to the future. Let me extend it to the future. Now, guess what? Whatever makes price from this order after falling from this liquidity point, whatever makes price by anything, maybe your village people now decide to look at the chart and touch it, you're expecting it to go down, try to pull it up. They can't hold it for too long. Price can only go as far as the previous liquidity it was coming down. The moment price goes there or approaches there, it falls. It gets there. In fact, if it gets there, it falls much more massively. I don't know if you get my point. You observe more fair value gap on the trend. Can you explain the effect of the role of fair value gap on the trend of agro commodity market? Okay. Now, some persons here might not understand what fair value gaps are, but let me just try to explain what the fair value gaps are. For instance, I think you mentioned trend on the trend of agro commodities. Now, let me just explain fair value gap in the simplest form. Okay. So basically, when we're talking of fair value gap, let me explain it like this. A combination of three candles. This one, 1. This next one, 2. And this one, we call it what? 3, right? Let's do it again. This one, 1. The next one, what? 2. And the next one, 3. Now, why did I pick this 1, 2, and 3? Now, I could tell that this was where the move for price falling started from. This was where the move price falling started from, right? Right? Pull up, then started from here. So I went this candle here and like, so I'm looking for the beginning of a particular movement of price in one direction. Like I could say, okay, this was where price started from before it started rising, right? So I can pick 1, 2, 3. I don't know if you get my point. Okay. I can't pick 1, 2, 3 because I'm looking for rising. So here, falling, I can pick 1, 2, and 3. Fair value gap is the difference between the high, especially, or the low rather now. Let me zoom in more so that you see it. Where is that? Where is that? Where is that? Where is that again? Okay, I think this is it. This is it. Please just bear with me so that you will get this. Your understanding will come to you. I think it's moving. This is it. Now, this first candle, candle 1, candle 2, and candle 3. Okay. After we do this first candle 1, then this other one, candle 2, is the candle 2 is our major point of focus now, where we are focusing on, right? Candle 2 is the middle candle is the most important candle. We are looking at the interaction of the first and the last candle, how they interact with the middle candle. Okay, this one is the middle candle. How does this one interact with this one? Now, it means that this one and this one, this is the low. The low of this candle and the high of this last candle, the low of candle 1, candle 2, did they touch each other? Did they? No, they didn't. Because I was trying to explain something before my network went out again. I'm back now. Mr. Peter Sunday, can you hear me? Hello, can you guys hear me? Can everyone hear me? You should be back.
Yes, yes, we can hear you.
We can hear
Oh,
you.
okay.
Yeah, it's loud and clear, sir.
I'm taking my time to explaining this. Please, if you are learning, just let me know. Good. Thank you. Thank you. I'm just taking my time to explain, right? You know, we need to have the understanding of these things. When we have the understanding, you notice that Trading is not, it's not as hard as we think it is actually. We just lack the basic information that we need, you know, to take us to where we are going to. And where are we going to? Is to get money. That's the destination, right? To get money. So where were we? I was trying to explain the fair value gap. Now let me just quickly explain it, finalize it, then we move on. So interaction of your candles. Good. So where's my candle 1, candle 2, and candle 3? Now on a normal day, candle 1, candle 2, candle 3, they ought to interact with each other. This candle 1, pull down here, candle 2, the middle candle, it does not matter what it does. But it matters what the third candle does, in the sense that it's either the third candle is bullish, that's price going up, and it can only go as far as this level, because this was where the low of this first candle is. So when it gets here, there's a higher chance that it will be rejected and start coming down. That means price is on a downtrend. The gap between this place here and this third candle that they did not touch each other is what we call the fair value gap. Now, it means that once price is inside of this gap, there's a higher chance that price will go down. And guess what happens? When price was inside of this gap, guess what happened? It found it hard to go above the gap, right? What happened then? It fell. So this is how fair value gap also works with this. The person asked the question, I hope I hope I've answered your question. And if I go, this is for bearish market. Now, the reverse is the case for a bullish market. The reverse is the case for a bullish market. Fair value gap has to be the one that, you know, should give you that indication that price is going up or up. All right? Basil, well, who asked that question about fair value gap? Zomduputa. I don't know if I answered your question. Yes, fair value gap. It's another trading strategy. There are 1,001 trading strategies out there. All right. But not all strategies can work for what you want to trade. You need to know the strategy that works for that thing you want to trade. For instance, the strategy that works more for Euro USD cannot necessarily work exactly the same way for USD JPY, because they are different instruments. So for this particular strategy, I need to find what works best for it. Okay. Yeah, another strategy, we have a lot of strategies, but there's no time to start. Next class, we might deal with another strategy. So some of you might want to go back to this video, listen to it, and start. You will now start looking at, oh, these candles don't just move randomly sometimes. They are moving in a particular order. There's something that is ordering them. You know, like fair value gap is dictating that, hello, once you want to go up, you cannot go above this particular zone. You see, in between these two lines. Because there's a fair value gap here. It's just like you want to pass through an electric, a barbed wire, and the barbed wire is electrocuted. So how do they put it now? You know, like those barbed wire fence that they put electric. The moment you get there, it will electrocute you. So it's putting a barrier here that, hey, you can't go above this level. Once you can go as high as this, that's enough. You need to fall back down, right? So the same thing keeps happening, right, with fair value gap. Now that is about fair value gap. So let me start to with we've taken much time. We've taken much time. Okay, so let's just take a cue now from this is wheat and this is current market price. Expanding as much as I want to, just go over to, I'll drop the YouTube link. You just watch on YouTube and you replay this video again, please. All right, let's do it that way. Just go to YouTube, watch this video from the beginning. You can rewind and pause and play as you like. All right, thank you. So now this is current market price. All things being equal, we are still expecting price to fall in it. We're still expecting price to fall, but the pattern is becoming different. It means that from this is, okay, let me go back to my 1 hour time frame. All through this place, the liquidity was working seamlessly, after liquidity it falls, after liquidity it falls, right? After liquidity it falls. Now, price is having the audacity to pull up, you know? Okay, let's look for liquidity. Now, if you don't see liquidity, just stay out of the market. Small liquidity here, it still fell. Small liquidity here, but it didn't really fall. It went up a little. but there was a gap down. Liquidity couldn't go up. It fell. It fell. It fell. After every point of view, we are looking at selling this market. But for the last few days, let me zoom out a bit. For the last few days, please let me unmute everyone. Okay. For the last few days, price has been okay. Price is not giving me as much liquidity again to enter my trade. Okay, small liquidity here fell. A little liquidity, but it rose. Where's liquidity again? Small liquidity here, it fell. Small liquidity here fall, but I'm not seeing that much fall. That means we are still expecting wheat to keep falling. And where are we expecting it to fall to? My system is hanging. Why? Okay. I'm expecting wheat to fall to, let me use my 4 hours to look at it. To this point here, where I put this line here. So where is that point on my 1 hour time frame? Where is that point? That point is still all the way down. All the way down. So yes, price most likely can still keep falling. But at least if I enter a sell, I can take my profits at this particular level here. So we can, still expect it to fall and we can take our profits here. Now, disclaimer, if you don't have good funds, by good funds, in fact, I would prefer nothing less than 3 to 5 million in your account to trade these guys. Anything agro commodity, being wheat, corn, whatsoever. Now, imagine that I entered a sell from here. And price move from here to this point. Let me see. Just this point alone. Barely 49 pips, 46 pips. That's even much. 20 pips alone. I'm sorry, I'm trying to move this guy. 20 pips alone is good money. Oh, sorry. Even if it is just 20 pips that you can catch, all right, it is good money. Now, depending on the lot size you are using to trade. I could remember the last time I traded corn, I used 0.35. Now, was it 18 pips movement? 18. And I was already in profit of 100 and 100 and was it 60 something thousand? 64, 67, I can't. 100 and something thousand, 0.35 lot size. That was what I used. Now, it means that what doing well. If you spot an opportunity and you possibly tell the direction price will most likely go, right? With agro commodities, your 0.01, your 0.10, your one standard lot, once you enter this market and price just moves even a little your way, you will be shocked by the massive profit you are going to be seeing. Then also the margin required is like the same thing, okay? So for you to trade these guys, you need more money to be able to make more money. So if you don't have up to that in your account, please top up your account. Let's be having our agro commodities. We are also coming up with agro commodities again. Hopefully next week, I'm coming again. We'll also do some trading. I'll do some follow-up. How is it going? Okay. That is why I'm teaching you strategies. Let us make real money. I believe trading is a business, and as such, let us treat it like a business. For every good business you want to succeed, your capital base should be good, right? And beyond having capital, knowledge also, they say, is power. So knowledge is what is going to help you make money in this market. And I'm here to guide you through trading the agro commodities to making good money, right? So now this is for wheat. Although there's a slight support right here, but yes, it is still a sell. Now, what's the worst that can happen? Worst case scenario is that price goes back up to liquidity. Now, I see a small liquidity here. Let me delete this. This is my 1 hour time frame. There's a small liquidity here, but it's like that liquidity is not enough is not enough for price to pull down massively. Now, this small liquidity, this set of candles, they are not much, but price is finding hard to pull up. Notice this one wanted to pull up, but was rejected. Come down, trying to pull up, go down. So if it goes up back again, once price can enter this liquidity zone, yes, then we'll start to sell again. We'll start to sell again. Now, this is for wheat. I think you can also apply the same thing to corn. Let me see. So corn, what is the current directional bias for corn? What time frame am I? 1 hour. If I use 4 hours time frame now, where has corn been going to in the last few weeks? This is from June 9, June 12th June, from June, and this is July, almost a month, now. Where has corn been going, up or down? Up or down? We are rounding up in the next like 5-6 minutes. Bearish. Zondu Computer, is it the only one here? Is every other person here with me? Are we still together? Are we still together? Are we still together?
Yes, we're here. We're here.
Okay. If my own is whoever is talking is who is here. What a great session. Okay, thank you. You're welcome at Samsung. You're welcome. So now, from what I have explained right now, corn is currently forming what now? Is currently forming a what? A liquidity. Do you remember? Agro commodities pays way more than indices. Take it to the bank. Way more. The same lot size, you get more amount of profit from agro commodities. All right. Now, this guy is currently forming a liquidity right now. Currently forming liquidity. Now, I want to be sure that this liquidity is not being formed from my support, because liquidity can also be a pointer that price wants to reverse, so if you're not being careful. So on my 4-hour time frame, let me check. Let me zoom out rather and check, does it align with the support? This is where the last recent support is. What's wrong with my system? Okay. So also on corn, then there are some relationship between some of these instruments, which I'm going to talk about another time. Then we're also going to talk about what time does this guy open and what time does it close? When is the best time to trade it? And what happens when it gaps up and when it gaps down? These are things that information you need to know. And with all of this information, you can make money from. Now, corn is currently forming liquidity, right? Now, we have established that on a 4-hour time frame, it has been going down. If I go back to my 1-hour time frame, you can see that this liquidity has been going on for 2 days. Yesterday and today, right? It has been forming liquidity since yesterday and today, looking for that momentum to do what? To pull down, right? So that means we are still actively selling corn also. We are still actively selling corn. Corn still has the possibility of going all the way down. So I guess this is where we are going to pause for today. Please, I hope you've got value. My intention is to give you value in 2 ways: value for your time, like now, and also the value also extends to your pockets, in the sense that when you start applying this knowledge, you start making money real time. Now, I've given you 2 trades: wheat, you're selling, corn, you're selling, right? So you can take profit at your discretion. All right. So we are going to stop here. By the next class, we will look at when it opens, when it closes. Then does it have break? Because some of these guys go on break, and they resume the same day here. So when is the best time to trade it? Then it gaps up, it gaps down, what happens during the gap, and so on and so forth, right? Oh, let me quickly look for that link. We will need that link. We will need that link right now. Just a second. Okay. So okay. So this is the link right here to this particular video, so you can watch it and so contact your account managers, tell them you want to start, you want to diversify your portfolio now, you want to trade agro commodities. So, like I said, the capital required to trade these guys much, but trust me, you are going to make way more money. So, with your 3 million, with your 5 million, making 100K, 200K a day is easy peasy. Trust me. All right. The main work is to get your capital in place. All right. You are going to get value on how to trade this guy and how to make the money. Making 100K, 200K a day is going to be easy peasy. This is what we do, all right? So thank you very much for your time. I've posted the link. Here is the link again. I'm sure you can also see it now. This is the link again, please. At Basil. The least amount of trading. You can trade with 1 million, but I would prefer you do 3 to 5 million. You can trade with 1 million actually, but then you'll be doing 0.01, 0.02, nothing more than 0.05. Because trust me, these guys are heavy. If you're in profit of 0.05, it can be in like thousands, and if you're in negative also. So yes, we are also going to talk about the risk aspect of trading agro commodities and how to manage your risk. Are there risks? Yes, just like you're trading forex and everything, but the risk is less, but we still have to manage our risk, all right? So we'll do risk management also, as well as every other thing. Thank you very much for your time today. And remember, my name is Victor. Your account manager will get back to you. I think I would, if not, I will be busy also tomorrow, Friday. Would have said, let's have another class tomorrow. But next week, we schedule another class, hope by Wednesday again, right? Yes, we'll schedule another class and see you here. You can't see the link. Wow. Let me send it to you personally. Maybe you can see it now. Please, can every other person see the link? Can every other person? Every other person, I'm sure you've seen the link. I've posted the link already. All right. Good. Thank you so much, Success. Thank you so much. Thank you very much for your time. See you next time.